Hello, hello, hello. I have a very special guest, James Kleimann, CEO of The Mortgage Scoop. The Mortgage Scoop is the radically different kind of the mortgage publications. It's unfiltered and insider guide to the mortgage industry. No press releases, rewrites, no bullshit. No, I love that. No bullshit. Okay. So
Principle.
I heard James before, and I met him a few times at the conferences in the mortgage circles. Pretty much everybody meets everybody. It's a small community, and we typically run into each other. And I really appreciate the depth in which James was covering a lot of things. Very in depth analysis of some stuff that's going on in the mortgage news, and really, some of the actionable insights that James provided, I personally took. So, James, welcome to the podcast.
I really appreciate it. Thanks for having me on.
My pleasure. All right, so let's start with the bigger picture, right? Macroeconomics and what's going on in the U.S. economy, Trump 2.0, and how it relates to the mortgage market. I tell you that again, my audience, most of my audience, are vendors and community of the mortgage markets, some of the AI specialists, some of the folks that are servicing the community. And since the beginning of the year, they've been quite slow. Everybody were waiting for the feds to make a big cut, and all of a sudden, we'll see a boom in the mortgage refis. We saw a blip, I think, right? Applications were up a little bit, but it didn't result in a tidal wave. So let's start there. What do you see? How would you characterize the current state of the market?
I'd still say it's slow and steady. I agree. I talked to a lot of vendors as well, a lot of folks on the servicing side, a lot of people that are plugging into big IMBs and banks and community banks even, and business has not exactly been booming for them. And I think anyone who was expecting one mega cut, a 75 bip cut, was probably reading the wrong financial news publications. I think the 25 basis point cut was already baked into the rates. And what we have seen, however, is kind of this slow recognition that, yeah, the economy is cooling. It is absolutely cooling down. There are questions as to how good the data was in the first place from the BLS, and maybe that's a story for another day, Alex. But even Jerome Powell, kind of someone who has really stood firm by a lot of his convictions, that we want to make sure we know that some of Trump's policies that we think will be inflationary are not going to offset some of the so-called gains that we've made in getting some of the inflation tamped down. So it's sort of this push and pull that I think a lot of people have been kind of waiting for. And recently the news came out that, like, look, the economy is just not exactly on fire right now, and it's not going to be, barring any major shits that we can't envision. So I would expect probably 2 more cuts this year,
Really?
probably a
Okay.
couple more. Yeah, I think probably another 25, probably 2 more 25 basis point cuts. But so much of it depends on, how do these jobs numbers look? How do some of the other factors, that push the economy look? I'm not a macro expert. You should call Logan Mohtashami if you wanna have that kinda take. I'm just a poor boy from, uh, who's trying to figure out everything like you guys are. But what I can tell you is slow and steady is better than what we had. And we're finally starting to see a couple consecutive quarters where mortgage lenders are making profits, and we're heading into conference season or maybe in the middle of conference season right now, and the lenders have more money to spend. Budgets are increasing. There are more positive conversations. You can look at the list of people who are attending MBA Annual in Las Vegas to about a month from now, and it's better than last year. And
Right.
I know anecdotally that there are more conversations happening about deals. So I think there's reason to be positive, but I would be very measured in how positive I am.
Yeah, that's a good perspective. In fact, you touched the unemployment, right? The unemployment numbers were revised, and now the unemployment is ticking up a little bit.
There were
I
6 guys
personally,
named Jason who had jobs last month or something like.
yeah,
Yeah, that was basically it.
yeah. So it's really a poor trend. Do you think that the feds are really paying attention to that mandate as the primary, the unemployment
I
numbers?
think so.
Okay.
Yeah, I think everything hinges on unemployment really, and so that's gonna be what everyone looks for, when the Fed meets next.
So we're saying the inflation is good enough. It is what it is. Now it's not the primary. Let's go and tackle unemployment.
If you try to get a 2% target, I just don't think that's achievable. I don't think anybody can realistically think that 2% is a goal that we can hit, and not suffer stagflation. That's my
Yeah,
perspective.
it's interesting. Well, for the Trump presidency, one of the items that I actually participated in discussions on with some of the government officials down in Washington D.C. was Fannie and Freddie exit. Right, when Mark Calabrio presented his plan, and it looked like it was a 2028 plan. It was if the Republicans stay in power in both House and Congress, and that will pretty much solidify if there's a exit from conservatorship. Now it's not the same story. Now it's saying, "Hurry up, go, 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 go. Let's release them right now."
Yeah,
What
but we don't
changed?
know how. Yeah.
Well, they did lay out the groundwork. So it's going to be a sovereign fund that they will start. They will buy back the shares. Then they sell those shares on the stock market. So it's the method was presented to us in the at the end of last year. Yeah. So it sounded it sounded like they thought through this, but there was no rush to get it done. And all of a sudden, it's a rush. Is that shareholders pushing? Is that Aikman trying to flex the muscle? Is that something else that we don't know? What do you hear?
I think that it's certainly shareholders pushing this, and they have every reason to do so, and I don't think anyone would accuse Bill Ackman of trying to, miss opportunities to make more money, and he's been very public and on record is saying that he thinks that there should be a release, and this is how he would do it, and so there is some modeling that has been done. I think a lot of people in DC and elsewhere would disagree with the way that he believes they should be released. Um, you have a couple different schools of thought here. I mean, you have the Mark Calabria school of thought, which he's laid out. They didn't quite get it off the ground during the last year or two during the first Trump administration.
Yeah.
But what's been kind of bandied about as a way to do it going forward is not what Mark laid out. Excuse me, Calabria laid out back in 2018, 19. And so that would be an interesting thing to see because you can't really do both at the same time. We still have a lot of questions about what do G fees look like? Is there a guarantee? How much of the stock do you put out there? So there have been some folks in the Trump administration who have gone on TV and said, like, we don't actually want to have, all of that on the market. We're just going to put a little bit of it out, but it would still be the largest IPO in history. So it's kind of like, it's, I don't believe that the conversations, despite it feeling like it's very go, 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 have reconciled with some of the major tensions that global financial markets would still need to be, happy with whatever the plan ends up looking like. And so that's really who's going to tell you whether it's a good plan or not. It's the MBS. And so I would be extremely surprised if they were released in 2025, which has been kind of publicly the goal here. Even 2026 looks
Crushed.
hard to
Yeah.
see, and I know that there are conversations happening with the NBA and, other industry stakeholders, and it's not like the NBA is jumping up for joy and saying, "Oh, thank God we're gonna get Fannie and Freddie back as truly private companies," or if it's gonna be one company, and I think everyone has reservations about, what that might look like and what impact that would have on the market. So, I don't personally see it. I think it's going to remain a long-term goal, um, but we don't even know if Bill Pulte is gonna survive, so that's another
Yeah.
question.
Yeah, my buddy Chris Whalen is saying that why don't Fannie and Freddie keep the MSRs, and the implied guarantee will be a part of that scenario, and just
Right.
see if that will fly, which is an option, I guess. And I don't think he knows, but it's going to be interesting to see if we. I'll be down with Rick Sharga in DC for this CEO roundtable. I think in
That's a good
in November. Yeah.
nice.
You should ask him. I mean, I definitely recommend. Some of the government officials are going up there, and certainly a point of the discussion, right? I lost money on Fannie Mae, I'll be honest. Uh,
Okay, so yep.
but that's all right. It's something that I'm eyeing personally. My firms have contract with both Fannie and Freddie, and I can tell you that they're getting more leaner and efficient, right? So they're investing in the right technologies. They're preparing to be private. So while you're saying that there's a lot of attendance in MBA and people are starting to grow bigger pockets, I see that Fannie and Freddie is really pushing a lean agenda, and if once that happens, there will be a lot of Fannie and Freddie people unemployed
Yeah, I
because
mean,
there's
they've also
so many.
lost market share. They were down to, I think it was 51% in Q2, which is the lowest it's been in quite some time, probably since like '08, right? So we're starting to see more non-QM. We're starting to see other products pick up in the marketplace. So I don't know if that's a sign that, Fannie and Freddie are becoming a little more selective in the kind of product mix that they want to securitize, or if it's something else. But I do believe that there will be further layoffs. Certainly at Fannie, I've been told that Freddie was more or less done with layoffs, and that Bill Pulte and Mike Hutchins have a good relationship, and he's camped out at the Freddie headquarters pretty regularly, and he sees them as a more innovative company. So
I can speak to that. Yeah, absolutely. The way that I was able to talk to Freddie guys and throw my ideas and see if they like it, I didn't find any difficulty in that. So the discussion on AI, the discussion of most efficient flows, the some of the workflow changes, they're ready to take on some of the interesting ideas, and that's very refreshing. Fannie Mae to me, it's very standardized workflow. It works. Why change? Right.
right.
Interesting.
That's always been kind of the reputation, right? Like we're not sharing anything new here. Everyone that I know is considered Fannie a little bit more measured, a little more conservative, a little more bureaucratic, kind of like an emblem of the DC kind of work model. Whereas Freddie, and I don't think anyone's going to say Freddie's like Palantir or anything, but definitely less buttoned up and a little less bureaucratic. But you're
Oh, I agree with that.
based on your experience.
Yeah, I agree with that. Um, Obviously, they are not paying attention to some of the non-standard mortgage markets. Specifically, I think I read your article on the crypto mortgages, right?
Yeah, interesting stuff, right?
Yeah, well, yeah, I'm not a believer yet. So unless you can convince me or my audience that that's the future, I don't see it. I don't see I mean, using the crypto wallet as the underwriting for the assets, sure, that I see. But
Same
uh,
argument with blockchain way back, right?
yeah, yeah,
If we
exactly.
had a time machine for 2018, 2019, we probably would have said the same thing, like, "Wow, the underlying technology could be really cool and useful," but it never really got adopted, so yeah,
Yeah, it's the same thing. I mean, when I talk to a few folks that are CEOs of the blockchain technologies, they have 1 or 2 clients. That's it, and the volume is tiny, and they're enjoying it. It looks cool. I saw the demo of liquid mortgage guys, and it's phenomenal. The tech that they build, great.
oh, it's good shit. That's the
Yeah,
thing. Like,
adoption is you know, unless somebody big adopts, like Genie, like Fannie, like Freddie, it's going to be tough to push.
so that's kind of the issue here, right? I mean, we talk about crypto mortgages, but if we look at use cases, right? We look at like a product market fit. How many guys do you probably know way more crypto people than me. Um,
They're weird people, by the way. They're really weird
there
people.
were people.
Yeah.
Well, we agree on that one. There's probably like what, a couple hundred people who would say, I'm gonna you know, use this as an asset and have it basically be a ledger and then use that also as the collateral to buy a house. Like a lot of people would just say, fuck it, this is dumb. I'm just going to, remove it, liquidate, and then use that. Now there are challenges associated with that, right? There are a lot of tax issues that can flag. Or you definitely need to make sure you have that part figured out, but I just don't think there's enough use cases now. Now, if everybody has some sort of crypto, if it becomes much more mainstream and there's a practical usage for crypto in my everyday life, like Alex, if I want to go to the grocery store because like, oh crap, I forgot to get pasta for what I'm going to make my kids this evening, and I just use something and it takes out $5 from my crypto wallet, like, okay, now we're talking. But I have yet to find that in the wild, you know? It's so yeah, it's hard to see mass adoption there, but I do think it's pretty interesting, and the underlying technology could be really cool, but I think it's gonna be a very niche thing. I think there's gonna be a couple LOs out there like Tyler Hodgson of Mortgage who are able to make this a business because of those, let's say there are 1,000 people who would do it, these guys are just gonna Google it or AI it, and then my article is gonna come up, and they're gonna go, "Oh, I guess Tyler's the guy to do it," and that'll be that. So good for Tyler, but yeah, I don't see this being anything more than, like, a very niche thing.
Yeah, two points. One is, um, I think his name is the guy that lives in Argentina, macroeconomist, um, Gammon, Richard Gammon, or okay. So anyway, he did an experiment running around Buenos Aires with the piece of gold and the crypto, and he just wanted to buy a Coke. So he he ran through store to store. Nobody took crypto. Nobody took gold, and he says, "Well, that's useless." He says that before I thought that gold is a safe haven, and this and that. And he says if there's a catastrophe, nobody's taking gold. What do I do with it? But that was an interesting point there. But as far as crypto wallets and underwriting crypto as an asset, to me, it doesn't make sense. If you are into crypto, I hope this is not your last money. And you have the enough savings in cash or bank accounts in a normal way and just diversify a small amount into crypto so you're not exposed to those, ups and downs. You're probably a very risky investor if you are putting all your money and using that to underwrite the loan. So to me,
But we
it sounds like a
years,
very niche.
right, Alex? Like, how many guys in Wall Street Bets probably have, like, 95% of their net worth in crypto, right?
Yeah,
Like, not an insignificant share, I would bet.
really? I don't know.
Like,
I mean, it's so risky.
you meet some weird ass people on the internet, so that's kinda my thesis.
I agree with you. But, yeah, definitely not me. I'm very conservative, put some money in the
I know,
in
we
the
under my mattress, that's what we're doing here.
well, yeah, is that a New York thing now? But,
Yeah, yeah, you get it with the bed bugs.
yeah, so to me, it's very, niche. Let's see what happens. I'm not a believer. I'm not a believer just because it's not a, standard practice. Yes, you can use it. It's gonna be niche business, but, let's see what happens.
And
Um
Freddie, I mean, they're interested insofar as they're going to study it. They're going to, look at how they can create some modeling to buy it. But I think they're many years away from doing that. Now, if Fannie and Freddie instead decided, hey, what if we radically changed our tech and used blockchain for that? That would be pretty interesting. But I'd be a lot more excited about that personally. But
Yep.
who
Ginny
knows?
is experimenting, right? So Ginny Mae is experimenting. Let's see.
Yeah.
It's a pilot right now, so we'll see how it goes. And the pilot went through, I think, successfully, quite successfully. But next step, I'm not sure, right? So when they go from the pilot to production, how do you adopt it? It's going to take years, right?
Yeah.
Rules, regulations, going through MBA, etc. So it's going to take some time. So a lot of companies are actually, instead of going into crypto and blockchain, they're grabbing their competitors, right? So M&A market was somewhat interesting, right, with the Rocket merger or acquisition of Mr. Cooper. Um, instant reaction of Mhm.
And Redfin.
And Redfin. Instant reaction of UWM to say, "Oh, we're moving all the loans from Mr. Cooper to ICE." Interesting. MSP, right? And then JPMorgan and Chase been busy quite a bit, right?
Personal and Compass.
Right, exactly. So there's a lot of reshuffling going on. I mean, obviously, it creates a lot of opportunity, but what do you see on the top tier market? I mean, bottom tier suffers. What's going on?
Bottom tier is tough. If you're under 1 billion a year right now in volume, unless you are tied or tethered to some other product or you have an incredible efficiency, maybe through workflow or maybe because, like, you just don't have a lot of layers of management, I just don't see how you have the scale to keep going if the market conditions don't really change, because if you think about it from this position, okay, so you're probably doing 80-85% purchase right now if you're under 1 billion. Great.
Yeah,
Like, okay, that's probably a safer, more sustainable business model, but none of these businesses that are so low margin, we're talking like, let's say it's 200 bips on their margin, 300 maybe if they're distributor retail in some cases. Um, that money goes away really quickly unless you can also capture opportunity during refi cycles.
Right.
And then you're gonna use that money to store over the cold months of winter, right, when nobody's buying in Q4, Q1, and you need your warehouse lines, to be over a certain, number to kind of, get everything done. You're not getting that next refi because you sold all that servicing already. So Mr. Cooper, Freedom, Lakeview, like, they already bought that loan. So now you're trying to compete against a company that's gonna call your clients 8 times in the next hour.
Yeah.
And they're gonna be relentless, and they're gonna have AI on their call, they're gonna have all kinds of crazy bells and whistles, and they're also and the most important part of this, Alex, forgetting all the bells and whistles, they're gonna beat you by, like, 75 bips on the refi. It doesn't even matter that you sold them, the loan or your servicing book for a great number when you did, because that was a year ago, that was 2 years ago, and that money's gone, like, you don't still have that money, and so you can't rely on that volume going forward, and that means you can't scale, and so I don't think that any company, maybe there are a couple exceptions there that are around the billion mark that are going to be thriving. And I think a lot of them are looking for dance partners right now. Few of them are, from my understanding, doing asset deals. It's mostly stock deals. And that's because it's just easier from an M&A structure to port over because you don't even have to tell the sales staff. You just be like, okay, Bob's here now. You say hi to Bob. Bob owns the company now. Like, yeah, here's what Bob's gonna do. They're building this other competence. They're doing non-QM now. So now you have that product you can sell on top of it, right? So that's kind of the where I see most of the marketplace. The middle market is where most of the M&A activity is coming from. And that's because they're big enough where they have sustained, they've kinda climbed the mountain, but they won't be able or they're not willing to spend the resources needed to really get into that next bracket. Because that next bracket, you're competing against Rate and CCM and UWM and all the mega servicers who have been printing money since their servicing book is now, 250 million a quarter, right? So you're kind of in that weird, like, do I try to just keep where I am or do I try to scale up and compete? But money's expensive right now, and it's hard to find investors unless you have better margin loans, right? So if you're just doing the vanilla, 30-year fix that everybody else is on, your margin's not very good. So you wanna have something else. You wanna have non-QM, you wanna have, other products that are gonna have
VCR or TL, HELOCs, frozen seconds. Yeah.
exactly, right? So you need that in your wheelhouse to be attractive to a suitor. If you just have the same shitty stuff everybody else has, and you want a high multiple because it's your business, it's your baby, you've been doing it forever, I think you're gonna be sitting for a long time, because they'll just wait you out, and you're not gonna win. You're gonna be at, let's say, 7 billion next year when your competitors went from 20 to 50. You know what I mean? So it's like it's the level of growth that you just won't be able to hit because you can't resource it or you won't. So, it's a tough market. I think probably Rocket is done with acquisitions for a while. They've got their funnel.
Oh,
They're
yeah.
in
They have to settle down and stabilize the company. I agree. Yeah. Like what
they
that
paid a lot. They paid
Mhm.
they paid quite a bit, and if you look at them, I know we're gonna talk about it, servicing for Mr. Cooper, I mean, they've got a lot of hairy ass FHA loans. They've got a lot of hairy VA loans that they're gonna acquire. If I'm Rocket and my whole image is like the American dream and John Denver songs and, this sort of like America is still a great place and you can do it with us and, you could build wealth for you and your kids. Um, at the same measure, if you're foreclosing on families in Central Florida, like, that's gonna be tough, right? So, um, I think they're in an interesting place. I don't know how well they'll be able to figure out the purchase market. They've always been absolute killers in refi, and of
Yeah.
any company in America, I think they're probably best positioned outside of Freedom to absolutely kill refis if we have a little boomlet. I don't know if we will, but that's probably it. But if they don't, then they still have all of the servicing revenue that's kicking off. That's a huge book, right? It's a $1.5 trillion book at Mr. Cooper alone.
Yeah.
We're talking a $2 trillion book. Like, they'll in a bad market, they'll still do 200 million plus in servicing, you know,
But right now, Mr. Cooper's hands are tied, right? Until the
Yes.
everything settles down. I spoke with those guys. The message is we don't touch anything, we don't do anything.
Yep.
We're waiting for this dust to settle, and only then we'll start looking outside of our playground to see what else is out there. But one thing that I did want to add to with your story. So I am that guy first and foremost, and when I called my friends at Google, I said, "Listen, guys, you know, who is using your AI right now, and
Yep.
how your support structure works?" And they said, "Well, we have a three-tier system. Tier one is for people that are sending us a lot of business. Tier two is people that will say, okay, we'll play with you, but we'll check in with you once a year. And tier three is low volume. We don't even want to support you. Figure this out. Tier one is UWM and Rocket," they said. So
Yep.
those guys are abusing the AI tools of Google directly, and they have a partnership agreement. So while the tier two and tier three people are sleeping or trying to figure things out, Google is helping the tier one guys to get things up and running quickly.
Right.
So the
And we
efficiency
want
and
to get it
improvement,
scaled.
yeah,
Yeah, and, like, Google is not gonna call up the number 29 ranked IMB and say, "Hey, guys, like, we really wanna get on this space, like, are you
yeah,
free on Thursday for coffee?" Right? Like, that's not gonna happen. So, as you said, I think the big are just gonna get bigger. UWM is interesting because I think there's kind of a natural ceiling to how big the broker channel, just broker, like, not wholesale, we'll get into that,
yeah,
how big the broker channel can scale because there are only so many people who are comfortable or familiar with that model, and it is a little bit different than retail. And UWM has sunk a lot of resources into trying to get people from retail to join wholesale. And what they're finding is it's a big leap to jump from I'm a retail LO at rate or CCM to I'm now running a broker shop. And now I'm dealing with all kinds of licensing issues and compliance and, all sorts of marketing is just like a basic challenge that you suddenly have to deal with on your own, right? And so how many brokers really want to do all that? Probably not that many. Some of the shops, though, are becoming basically banks under UWM's flag. And I've reported on this. I mean, it's the non delegated correspondent model. And so they're banking these loans under their own name. They have warehouse lines, they have lines of credit, they have everything one would do. UWM wants to support that because that's still wholesale, right? And they're using UWM's tech and really, I mean, the UWM is amazing systems, right? Like that's their secret sauce. It's not like brokers are better or any of the rah rah sports metaphors or bullshit like that. They're just better at process, right? So they're way more efficient. They can produce a loan more cheaply than probably anyone in America. And so they're using that to get these companies to grow with them, but they don't want them to grow so big or not use the system so that they become full correspondent lenders because then that's your competitor, right?
yeah, exactly.
And so that's an interesting area. So UWM is smartly building this correspondent. I've heard sources tell me that it's probably 25 to 30% of their business, and they've kind of moved away from some of these phrases like what is it called now? It's like mortgagematchup.com. It used to be findamortgagebroker.com, right? Like that's a deliberate decision, right? And so again, they're all gonna be using AI. Have you used any of the stuff that UWM has rolled out? Like, it's pretty interesting. There's like
Sorry.
Rio, there's
Yep,
Mia.
I developed my own AI. So one of my three firms, I'm a TPR firm, like Citus.
Yeah,
So I have a rated TPR firm, the only one in the industry which is AI based. So I know exactly what they're doing. That's
yeah,
why I'm in to know, everything that's going on with Google, with Microsoft, with Amazon, etc.
I got you.
And I know different approaches. And whenever I hear somebody talk about I want specifics. I want the in depth description of their machine learning algorithms and NLPs and this and that. And we'll probably do the same thing. So yeah, in my mind, I haven't tried it. I don't call um, facing client AI as true I mean, yeah,
No,
you
it's
got to
not,
be, yeah.
obviously. Yeah,
It's interesting bots. Which or guideline specs or checkers. So all of that stuff is nice. I haven't seen UWM front end. I mean, from the LO perspective. So is it
So,
impressive?
let's say you're a good LO, Alex, like,
Yeah.
hypothetically in this situation, you've been doing this for 10, 15, 20 years.
Right.
You remember, before Dodd-Frank even happened, right? So you've been doing this forever. If you were to look at an LE, a loan estimate,
Yeah.
you would just naturally like, I would look at a news story and I would go, "Oh, that's stupid, like, you shouldn't have done that," or, "That's a problem," like, "Oh, that's gotta be fact checked." Like, you would be able to rip that apart in, like, 15 seconds and send it back and say, "Here's our strategy if we wanna beat this competitor," right?
Sure.
So what UWM is doing is they're basically taking it and saying, "Okay, we're gonna train this bot to crawl through it, right, and pull everything out and say, 'Oh, okay, like, that number doesn't make sense,' or 'MI is too high on this one,' or, like, they screwed up." I think that's really smart. The average LO who's going to use UWM doesn't need it, but, I mean, how many LOs don't know what they're doing in America regardless
Got
of
a
what
bit.
channel we're in, right? So
Yeah.
and if they're gonna be winning deals because they think UWM's technology is there, or Mia, like, this is the voice chat thing, right? So, it's essentially gonna call up people and say, like, "Hey, you should call up Alex, like, Alex is, thinks that there might be a good product for you right now."
Can you tell it's AI? When
Yeah,
you
you know why? You know why? Because there's, like, a weird latency.
Yeah,
So
I
if you
know.
and I are
Right,
having a
exactly.
fluid conversation, it
Right.
would be like, "Alex, did you know that you can get a better" they never talk about rate, obviously, because you don't wanna step on those compliance minefields. Um,
Within 10 seconds, I can
it's gonna
tell.
get better, though. It's interesting.
Yeah,
I
I can
can
tell.
tell, like, you ever see the movie Her?
I think so, yeah.
Yeah, it's, like, a little creepy to me, like, how realistic they sound, but it's also kinda like, the uncanny valley sorta thing. Like, there's just something a little off with it, but it
I
weirds
can
me
tell you that
out.
yeah, so on the AI presentations, I've done many of those, where I give approval to a software company to use my image, to learn from my voice, to get my accent, and it gets it, I'd say 95% there. My wife could tell the difference.
Sure.
Anybody else, no. And I look real. So it was just phenomenal, and I said, "Alright, maybe that's the future." That's interesting. I can give you the tool name that my editors use. Results are great. You have to say a certain pattern of words, and then it learns. And then if you do, say, 5 minutes or 10 minutes, it learns even better.
Now, but do the platforms do they penalize this? Because I downloaded one of those and I was going to do it so I could just type in like, here are my thoughts about a UWM thing or whatever, and just have it automatically spit all these things out. But I'd heard from my wife who works in media as well that TikTok, like they can sense this. Somehow they know that these are like AI projections and that they'll knock the
Hmm.
quality or they de-index them or whatever. They penalize you somehow.
Interesting. They didn't penalize me, but I have to be careful. Um, I see. Okay, so let's go back to the mortgages. We can talk about AI forever, I think. Let's see. Are you worried about FHA delinquencies? Right. So uh, it seems like we're at the point of very heavy delinquencies. I guess first time home buyers. Did they see 50% delinquency rate, or maybe a 50% increase in delinquency rate? I saw 50. I just don't remember what it is. Um,
Yeah, I don't remember. I'm sorry, I don't know.
it sounds too high. The Ginnie Mae portfolio, I think 10, I would think is kind of normal. 10% delinquency on the first time home buyers and VA. But I saw the numbers pretty high, so maybe 50 is too much. I mean, do you monitor that situation, and what do you make of it?
I do, yeah. I've been really focused on one, we have a lot of changes that are gonna be taking place in October with the servicing rules. So that's supposed to fix some of the issues that were created during, the CARES Act pandemic era, which again, like the goal at the time and a very laudable goal was let's not get people booted from their house. Like, let's figure this stuff out later. But I think they kind of overcorrected. And I wrote a story about a week or two ago about something that I've been hearing for a long time, which is while most people who have an FHA loan or a VA loan and fall in hard times and are late on payments, become delinquent, and it's just like something bad happened, they had a medical issue or they lost their job or a spouse died or what, like, it's America, right? Like there's still a lot of like random fucked up things that can happen to you. But those are just honest, hardworking people and like shit happens, right? But there is a class of professional people who have figured out how to game the system, and they will make so when you get the mortgage, you have 60 days to make the first payment, and they know that, so they won't make the first payment, and then they'll make another payment a couple months later, and then they'll have to say something like, "Oh, like, this happened, and gosh, I'm sorry, I just can't pay it. We're gonna tag it on to the end of the loan, and while we're here, like, should we just negotiate maybe a lower rate? And I promise I'll pay. I promise I'll pay." And I don't wanna make people think that this is happening, to 2 out of 3 loans or anything like that. I don't This is anecdotal, um, but I talked to an FHA servicer who's doing a lot of loans in some areas that have higher rates of delinquency, and he's like, "Probably half of my loans are what I would consider a strategic defaults." And so strategic can also mean I decided to make my truck payment that month instead because I only had that much money and my taxes and insurance rates are insane, especially from when I,
Sure.
got the mortgage, right? They could be up a couple 100%. And I just like I don't have the cash flow to handle that. So, we have structural problems. We also have like in any system, if you give people too much leeway, like there will be people who abuse it, right? But I would be very concerned about FHA pools in Central Florida, in Louisiana, in Mississippi. We already see delinquency rates that are much higher in those areas than others. Areas where there have been natural disasters. I mean, that's another issue where servicers are like, I mean, if there's a storm that happens, even if the borrower's unaffected, they can just declare that they don't have a storm. Now, also, like these servicers don't cry for them, like they're still getting paid, right? Because these are loans that are insured or, guaranteed in the case of Fannie and Freddie. Uh, but it is interesting to me that there are very few Fannie Freddie delinquencies, and we're like 1%, 2%, something like
Their
that.
portfolios are clean. I mean, I'm
Always a whistle.
helping them on NPL, RPL sales. It's
Yeah.
clean. Their
Yeah.
portfolio,
And
Ginnie Mae's a mess. Yeah,
you look at the Gini book, you'll get
yeah.
to the end and you go, "Oh shit. This looks pretty scary in some areas." And so, if you also look at the compare rates, Alex, like there are some lenders out there that are, north of 300, 400 on some FHA products. And for those who don't know, what that basically means, like they have a very high percentage of loans that are at risk of default. Like these are 90-day plus. And I don't know what can be done about that. Like you don't want to go in there and just say, okay, we're going to get all these people booted and we're going to take it over. But, right now, everyone's sort of in a holding pattern, but it's going to get worse because it's not like the job market is improving. And these tend to affect people from, non white collar work. So yeah, it's a tough spot. I would be worried about it.
Don't you think that Trump is actually not supporting kicking the can down the road? Right? So things like VASP or things like, COVID forbearance programs, that's done. That's over.
Yeah. So VASP is gone. They do have like a partial claim
Yeah. Hot partial
or
claim.
to replace it in VA. I don't know how good it is or how effective it is at preventing, foreclosures or anything like that. I think the administration could do a lot more to work with borrowers who are in these positions. But the biggest thing is like you got to fix some of these rules, and some of them are going to be fixed for October when they take over, but not enough. And like,
But I
yeah,
don't think Trump is going to do enough, right, for those borrowers.
I would be
Uh,
surprised if
yeah, exactly.
that were on his radar.
Is the same song, right? He says, "Well, if you're delinquent, you can pay. You shouldn't own the house," right?
And look, like there is a certain argument to be made that from an economy standpoint, you want to have a certain amount of liquidity and movement, right? Like you don't want to
It's
just
the economy,
because
exactly.
we're not building enough housing to offset, people who are also one not paying and just sitting in their houses. Like, and again, I don't want to portray this as like you have 10 million people who are out there not working, not paying their mortgage, and just like fuck it, who cares? Let them do whatever they want. I'm not saying that, but you do want to, and you also don't want to kick all of them out and have a crisis because you have other social ills that spill from homelessness. Kids need to go to school, people need to be healthy, people need, there's a productivity factor that you would also need to consider if making a decision like that. But there has to be something in the middle, right? Like
Yeah.
you can't just have, one or the other. So, but I don't know. That's a big thing to fix. Like you have to fix the Dodd-Frank servicing rules if you really want to figure it out. And I don't think anyone has the political capital or interest in doing that.
Yeah, I agree with that. Now, on the same topic, I don't think Trump announced yet, but I think he's planning to announce housing an emergency, right? Which means I have no idea what it means, right? I obviously we have
Yes, it is.
affordability in the problem, right? We can't afford to buy a house, especially a first time home buyer. Let's say there's an emergency. What can we do?
There's a lot that you could do. So, my guess would be this would probably be more meat and potatoes housing issues. Like could they eliminate MI for certain things if you want to reduce, I think it would probably come down to housing costs. That's the press release that I saw from, it's like a month ago, something like that,
Yeah, yeah.
something like that. It just
Mhm.
kinda came out of nowhere, suggested that it was really a cost issue, but the best thing they could do is unpopular with a large percentage of their constituency, which is like you eliminate single family zoning, you do density bumps, you try to, I don't know, can you have better bridge lending from Fannie and Freddie for multifamily? Can you help? It's a capital markets problem more than anything. So there are limitations to what they can do. Could you figure out better modular construction? Can you give more money to the home builders to build more factories so they can do full wall panels in one place, and build in another? Can you change the zoning and the building codes in Colorado so you don't have like, it doesn't cost you $500,000 to build a fucking house? Like it's insane stuff, right? Like, so that would be the smartest stuff that they can do, but that's very technical. That's not like front page stuff, which is in my view, what they usually try to go for. They want like the big splashy kinda headline, like nobody gets out of bed for zoning code reform.
It's interesting. The price on the dirt, the land, is dropping now
Is
across.
it dropping?
Yeah, yeah. Now, Bigger Pockets reported that yesterday that the dirt price is dropping. I wonder if there's an opportunity when it drops far enough. Before we used to call Warren Buffett, now we call Elon Musk. You know, maybe he can put tiny homes and what's his company that puts the tiny homes everywhere.
I don't
Maybe
know.
that's.
He had the tunnel company that hasn't really done much, but
I
yeah, I don't.
actually did a project with them, the Boring Group. So one of my firms, yeah, yeah, we did the research on the tunnel in the city of Chicago. Yeah, I don't think they started digging yet, but the research was done. So it's yeah, not everything works, but at
Yeah.
least that one I think. Remember the when Elon was living outside in the modular home for like a week just to test it out. His own, yeah. So
It's interesting.
maybe there's something there,
I
but
mean, I think there could be a huge future. Like, you wanna talk about low-hanging fruit, so how about some ADU financing reform? Like, you
yeah,
can't tell me that Fannie and Freddie couldn't figure out tomorrow, if they really wanted to, how to, do a blended ADU 30-year fixed or 15, like, combined mortgage, use the collateral as the home, and just kinda bolt it on. Like, sorry, that's really, really freaking obvious, but, like, they can't even do that. So, my expectations are pretty limited. I do think tiny homes, not even tiny homes, but just smaller homes that are better built, better constructed, using modular construction means and robotics, like, could be a big change, but at the same time, our construction labor force is already dropping because it's, a lot of these guys who build these houses are Hispanic, and they're scared that ICE is gonna go there, so it's hard to see them, then building all the stock that we need. So it's a really tricky situation. I don't know that they have like a comprehensive plan. I would love to see a housing czar, right? Like one person
sure.
who's like, I'm in charge of all housing. I'll volunteer myself. I'll step up. Don't worry.
Go for you. Yeah,
Thank you. But, like, you need somebody because right now, nothing works in housing because if you look at it at the federal level and the agencies, like, say what you will about HUD, no one will ever accuse them of being, like, innovative or
yep.
practical even, right? Like, the whole thing, runs on, like, code and, years of learned behavior. They don't solve individual problems. The worst housing in America is NYCHA, which is controlled by HUD, like Imagine that. That is so, like, having the government just step in and be the housing provider, I don't know that there's a template that has worked. Um, and then you just run into the inefficiencies of the private market or people that don't have good incentives to build it the right way for the right people that need it, you know? So it's yeah, I you have to start from scratch, I think.
Yeah, I agree with you. In fact, I spoke with a former Fannie Mae director. Shit, his name escapes me, but he was doing research on the land outside of Las Vegas, which is owned
Right.
by
Yep.
locked by the government, and he says just release that from the government into public, build the houses, and all of a sudden, you solve the housing issue in that area.
I
And I'm
mean,
sure that
it's like it's crazy what like, it's just, like, random nowhere, and there's just a bunch of houses, and you're like, "Okay." I mean, cool. I guess that works in some places. I mean, you
it
can't do
does.
that federally in a lot of places, like, there's a reason nobody's built in certain areas, right? What you wanna do is build more density in places that already have viable communities, like, I live in a three-story building in Brooklyn, like, this could be a six-story building, like, relatively easily, if it could be financed, if there weren't local roadblocks, because my community board would tell everybody and their mother to fuck themselves the minute someone proposed making this three-story building a six-story building in the most densely populated city in America. So, like, those are the bigger issues, like, building houses outside of Vegas, cool, like, if you can do it and it works, great, but that's not gonna solve the problem.
Yep. Well, let's monitor. Somebody will definitely offer the solution, and it's going to be interesting. We're here to take on the opportunities and see who's going to go there first. Talking about opportunities, there's a lot of hype about AI. I'm a practitioner. I know at least 12 technologies that is considered an AI umbrella, and I still feel that the adoption rates. I mean, CEOs are talking about it, how important it is. We have to do something with it. AI is the future. Da 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 da. Da. But to implement the AI in their own organizations, I I don't see it. UWM, Rocket, yes. Um, JPMorgan, yes. Some of the mid-level folks, I don't see it. Do you?
Probably not. I mean, also, like, if you consider let's just take the average IMB, they're usually sales focused, right? Like, these are
Yeah.
companies that they're kind of built around the idea, like, in most cases, the CEO is a former loan officer, right? So, sales guy. Generally, the ops people are not the ones driving, you know, driving the boat there. A lot of the people who work at these companies are also a little older. We're not talking about, like, native technologists, like, I'm in my late 30s. I can still remember when we didn't have the internet and, like, playing Oregon Trail in 3rd or 4th grade or whatever, but, um my parents, like, half their life, they had basically no technology at all, right? And, like, it's a real struggle for them to figure out how to do a PDF. So I think trying to implement something across a whole company at the average IMB would be really difficult. I mean, if you can try to skin like a chat GPT onto your own internal process, like my former
Right.
company, Housing Wire, is doing something like this, and hopefully it works, and that'll be a good use because I think there are a lot of things you could do and just kinda supercharge your own work and everything that you've already built, everything you've already done, like, as long as it's, um, responsibly handled, great, you could really do incredible stuff. The average IMB, I mean, it's what are you just creating, like, a better marketing strategy? Like, a bet
You're using somebody else's AI tools, right? Exactly.
right.
So I attended Housing Wire AI Summit twice.
Oh, how was it?
I I did not
Wait,
attend this year
okay.
on purpose because the second time was enough. Again, I don't want to hear about hype. I don't want to hear about the importance of it. I don't want to hear about that, everybody needs to plan. It's a future. I get that. If you get up on a stage and show me how it solves my problem in generic fashion, that's what I want to see, right? It's almost AI demo on the fly, which will impress folks, including me. So this is exactly what I did with some of the government officials. So our business is paper, right? If I can have a PDF file of 10,000 pages, complete mess, drop it in a black box, and that black box will completely analyze everything, give me what's inside, make a compliance decision, analyze onboarding file for servicers, create recapture opportunities. So analyze the data on the fees like Rocket and UWM. So that's the power, right? So
Mhm.
it's a task that gets fully automated. That's what I want to see from AI. And right now, I didn't get to hear about, how AI will help me or somebody else or LO or a servicer from the conference. The importance, I got it.
Yeah, I think everyone kind of
Yeah.
understands that it's important and I think there are a couple things that always stick with me. There are a lot of CEOs in mortgage out there who say the goal of us building out this AI, whatever it looks like, whatever scale we're trying to achieve, the goal is not to eliminate any jobs, and we don't think we're going to.
I think
Mm.
so. I'm opposite.
Utter bullshit.
Yeah. Yeah.
And I think like any LOA, any processor, 9 out of 10 mortgage underwriters, most people in fulfillment, half your marketing department, probably more. I think they're all going to go away once people actually figure out
Yeah.
useful workflows. I think right now, like, they just haven't figured out how to do it yet. But you don't own a sports team as a mortgage CEO by being like a nice cuddly cat, like,
Or
so I just don't think that they're going to. I think they're saying this because they don't want to scare people, right? Especially when they're not ready to really utilize it. But so that's the first thing I'll say. The second is I know of a couple companies out there that are doing pretty interesting stuff, and at least on the mortgage LO kind of origination side,
yeah.
they're positioning themselves kind of between the LOS. So think of like a classic Encompass, and the POS. So like a blend or like a total expert
Yep.
for this ERM. So they're trying to kind of like do all these things so they'll automatically read the document, right? And they'll pull out things and say, okay, this doesn't match or this is right. Or you don't even need an LOA to do that. You don't need a processor to do that. So it's just like live and it's immediately sent to the LO and they can focus on just being a salesperson, right? And
Yeah.
like kissing babies, shaking hands, all that.
Interfacing with human interfacing with human. Exactly.
Yep. And then on the other part, so Tidal Wave is one example of a company that's doing something kind of like that. And I hear is a
Angel AI. Pavan, I just said Angel AI. I hope you're gonna
yeah.
buy me dinner at the conference. But
I mean, Pavon has also made some claims that I don't that they sound like too good to be true to me. I think he said something like his entire cost for a loan is like $200 or something, and like his cost, like what Pavon costs alone is probably $200 per loan. So I don't know that
yeah.
seems unlikely to me, but I digress. And so I think there are some interesting companies out there that are doing cool stuff, but the reality is like the average mortgage lender has been using some variation of an Encompass with Blend, with Total Expert, with OB, with all these
So
things.
known pieces put together in a different way, right? That's what it sounds.
Nobody gets fired for using Encompass or OB
Sure.
or Blend or any, and
80% of the market is Encompass, so let's use it.
not a knock on them at all. I mean, certainly I've done some reporting that has been critical of kind of, how they interact with some of their clients, but it's hard to see anyone leaving that ecosystem. The sort of, what I just described is like the Encompass with the Blend, with the Total Expert, with the OB, because you have to almost rip everything up and start from scratch. And like, where do you build your own proprietary LOS? Like, then you're committing to basically a 10-year project. And some of the big lenders that like the biggest lenders out there right now, a lot of them have their own proprietary LOS that they built like 20 years ago, right? And it's not great technology at this point, like, some of it's workhorse stuff, but, like, okay, so do you wanna take on a project like that? Now you can build something new, but what are your other options? So then you have, like, a Meridian Link, right? But that's
Yeah.
mostly credit unions and stuff like that.
What do you
You
think
got
about Valen?
Valen's interesting, I don't know a ton about them. Vesta, they got PennyMac, but they're kind of only doing core at this point. They don't have any big non you know, non-core players. There's only, like, 15 companies work with them, so you would have to prove that, like, can you handle a CCM and do that, right? Like,
Yeah.
that's a totally different company than, like, a PennyMac, for example. So, it's hard for me to see anyone really taking the leap that they need unless they build it full stack themselves. Like, what is the company out in Connecticut, former Zillow? Tomo.
Yeah.
Tomo is doing that. They're kinda similar to Better, right? Same deal, Better. Could they white label and license out the tech? Maybe that would be interesting, but who do they license it to? People who are already on an Encompass workflow? How the fuck would that work? Like, it's like this is why I just think it's everything is so slow and mortgage and
There's
Fannie and
so many rules that you have to know. You have to have so many subject matter experts, and you have to choke up, $5 to $10 million a year on the development. It's not easy. It's not
even
easy.
just try to get a different LOS. Like, let's say today, like Alex, you run a mid-sized mortgage company, you're doing 5 bill a year or whatever, and you say, Encompass is annoying. I'm paying this administrator too much money, and the latency sucks, and my LOs are complaining. I don't want to do this. I'm gonna go to Vesta. I'm gonna go to Mike U.
Yeah.
But probably gonna tell you it's gonna take 2 years to port over. So then you have parallel costs, and it's gonna cost $150,000 just to get on his system, right? And then you're gonna have to pay consultants, and you're gonna have to get everyone trained, and it's a huge and you're gonna have to make sure that all the other tools that you want are gonna work seamlessly when you launch it. Like, fuck, that sucks. Like, that's a huge pain in the ass. So they know that at ICE. And so, it's kinda why the dynamic is what it is. So,
My projection in 2 years,
yeah,
you'll see significant push into, servicing technologies, doing everything in tech. So, I would definitely.
prioritization in tech, you mean, like, in
Yeah, yeah, yeah. So MSP will have a serious competition. Yeah. So Valin is capturing a lot of market share, and they
oh, cool.
portray themselves as the tech company rather than a servicer company. And then if something goes to as a default, like they have feeder loans, right? So if it goes to the default, they'll send it to a different servicer to do loss made. So they just focus on pure hardcore performance servicing.
Yeah. I mean, that's an area like MSP, that's gotta be what, 65% of the market, right?
More 80.
80? Jeez, yeah, I mean,
Yeah.
it's great, and, like, nobody talks about servicing tech, right? Like, it's always on the origination side that you hear the complaints and the grumbling and all that, but nobody I don't know, or at least I don't hear it much, but, yeah, I mean, it's such a big it's what, 15 trillion, excuse me,
Yeah.
in servicing out there, right? So,
We'll see. I mean, nobody wants to go against ICE. Plus, if they're in so many companies, and I use at least 3 companies owned by ICE, so I can get threatened if I start building my own. So I'm sitting quiet and happily using their tech. Uh,
I mean, I know some folks in the vendor space out there who tell me that everyone's just trying to get bought by ICE because they're the only ones buying
sure.
right now,
Yes,
unless you're
they have a lot of cash. Them, Fidelity, maybe First American now. Um,
no, they stopped all their prop tech buying a couple years ago.
yeah, yeah,
You know?
yeah. I met with Kevin, and he's no longer with First American, but Kevin Wall. Yeah, so it's sort of slow. But I know we've talked for an hour. I could talk another hour. So maybe we should do it again. Any final words that you have for my audience? I hope everybody learned quite a bit and paying attention to the same things as we do as mortgage professionals. Any final words, or anybody can subscribe to the news channel.
Yeah, so I run an independent news organization called The Mortgage Scoop, and we cover the good, the bad, the ugly of mortgage, right? And there's more to the story than what you read in the press release. And I'm not here to dunk on people. I'm not here to worship them. I'm just delivering no bullshit, you know, news about what's really happening in this space. And it's a very consequential space. We're talking in a bad year, $1 trillion, right? So
Yeah,
I think there's also not a lot of scrutiny, and there's too much pay to play in the industry. And I don't take any money from anybody. And we're trying to build kind of a water cooler for the mortgage industry. So I send out 3 editions each week as a newsletter: Monday, Wednesday, Friday. I'll be launching a paywall in October. I'd love to have more people read my stuff. I mean, you judge it on your own. My stuff is
yeah,
out there for people to see,
yeah.
and hopefully people wanna get the scoop. And so, I'm out there breaking news every single issue. So if you wanna stay in the know, check it out. You can always call or email me. I'm at 201-994-9638. I'm not scared to put my number out there. So call, text me, tell me what's up.
Sounds good, James. Thanks again for your time. Great topics.
Yeah,
Take care.
let's do it again, Alex.
Yeah,
Thanks again.
absolutely. All right. Take care.